Hey everybody, welcome to a new episode of Blockchain Central. If you saw our video summarizing the tumultuous year of 2018, you probably know how optimistic I am when it comes to the future of blockchain, DLT, and crypto. But how can we be optimistic after all that went down last year? Watch this video to find out. 2018 was a year in which the crypto industry was forced to grow up. Most money made in the crazy year of 2017 has already been spent, and now more reliable business models are needed. It's not important which tokens are hot and which are not. What counts is the maturity and the bottom line. This brings us to the first prediction. I think that the crypto market will begin to slowly recover in 2019, but that recovery will be nothing like we've seen before. In 2019, the bull market will probably be slow, backed only by more robust business models and scalable projects. Enterprises which cannot demonstrate sustainability and scalability will probably continue to slump, but the ones that can will start gaining traction. I feel that one such project is Ethereum. Its current price drop is most likely caused by diminishing interest in ICOs and by startups selling their ether to maintain liquidity. But the underlying capability of the platform is still undeniable. The decentralized processing power as well as bandwidth that it provides should cause more companies to adopt decentralized, cloud-based applications and bring increased usage of smart contracts. We talked a lot about Bitcoin ETF on this channel and analyzed its implications for the industry at large. But despite its significance, whether it passes or not will not make or break the entire sector. There is no doubt that it would be good to be able to trade Bitcoin as a commodity. But there are still many people who are convinced that the decentralized currencies as a principle should not be incorporated into old financial systems. One way or another, the Security and the Exchange Commission is still having major concerns around manipulation, fraud, and digital custody risk. Since these are not likely to be resolved anytime soon, I wouldn't count on having a crypto ETF accepted, at least not in early 2019. I think it is unavoidable that the widespread adoption of crypto will continue. This is likely to manifest in two key areas: institutional adoption and institutional investment. Especially if our first prediction is true, the recovery takes on a more stable, less volatile route, institutions might be more inclined to adopt crypto. One such example is the state of Ohio, which will become the first state in the US to officially accept tax payments in Bitcoin, including paying corporate taxes. The state cooperates with BitPay to handle the payments and conversions. This means that the long-standing argument that Bitcoin is not a currency because you can't pay taxes with it is no longer valid. It is likely that more states will follow suit to entice innovative companies to incorporate there, bringing jobs and economic growth to the area. The second crucial area of adoption is institutional investment, which includes security tokens. Yes, security and asset-backed tokens are becoming a thing in the cryptocurrency landscape, especially considering the increased regulation of ICOs. It is possible that security token offerings, STO, will increase in popularity. There are several benefits to STOs, with one example being that they have intrinsic value. Security tokens can represent the underlying interest in an equity debt position, profit sharing, dividends, voting rights, and even other benefits that their holders can have. Let me know in the comments if you'd like to see us break down the STOs in detail. I'm convinced that 2019 will see the increase of use cases for blockchain and distributed ledger technologies far beyond just cryptocurrencies. We know that the technology is powerful and that it can disrupt multiple industries. This causes many multinational corporations to invest heavily into DLT research and development. Believe it or not, these include JP Morgan. Despite the fact that their CEO, Jamie Dimon, is a staunch opponent of Bitcoin, the company continues to develop their internal enterprise blockchain platform called Quorum. It has been reported by CoinDesk that even Apple, which has been extremely cautious and reserved when it comes to the blockchain technology, has filed a patent for a blockchain solution used to timestamp data. Other companies looking into DLT are Microsoft, Oracle, IBM, Alibaba, Facebook, and even Ford. And I think it is likely that in 2019, we'll see at least one end-user blockchain product roll out. Which leads us to the final and probably the most optimistic prediction. What blockchain really needs right now is a massively successful breakthrough project for massive adoption. And I'm talking Facebook level of success here. It is likely to happen in 2019? Probably not. But I remain optimistic. It is difficult to predict what such product it might be. There are so many possible applications of DLT, and it could really be anything. It is likely that such a product will be based on a distributed application, DApp, or even a distributed autonomous organization, DAO. But it might as well be something else. Whatever it is, it would have to be a massively adopted, disruptive service that takes the hearts of the end users by storm. And the beautiful thing is that it could be developed by one of the industry giants mentioned in the previous prediction, but it can be a completely new player with a great idea and even better implementation. I keep my fingers crossed that a decentralized, groundbreaking product is going to enter the market in 2019. What could it be? Let me know in the comments below. Before you go, please know that this content does neither represent financial, legal, or tax advice, nor is it supposed to be understood or interpreted as solicitation to buy or sell any securities, coins, or tokens. Thank you for watching. If you like this video, make sure to hit the like button, and don't forget to subscribe to Blockchain Central to never miss a beat. Happy investing.